Good morning, Samfam. This is Ria from Samaya. Today, the topic we are going to brush up is company audit. The first subtopic under here is section 141 regarding to the eligibility, qualification and disqualification of auditors. We'll see the first eligibility. Eligibility of what? Who? A statutory auditor. Eligibility of a person to be appointed as a statutory auditor. A person, that is, who is proposed to be a statutory auditor, shall be eligible only if he is a chartered accountant. A firm, any firm, shall be eligible if majority of its partners are practicing in India. The firm, including LLP, when appointed as an auditor, only partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. That is, that such firm, any kind of firm, whether it be a chartered account firm or a mixed firm, also contains lawyers or architects, etc., or some other professions. Majority of such partners shall practice in India, and only that partner who is a chartered accountant shall act and sign on behalf of that firm with regards to the statutory auditor. And what are the qualifications? The qualifications here were the negative list. Negative list is if any condition that was fulfilled by such person or that firm shall not be eligible to be appointed as an auditor. If that firm is a body corporate other than LLP is not eligible to be appointed. Any person who is officer or employee of the company, what company that client, to the company whom the statutory auditor was to be appointed. If that person is an officer or employee, not eligible. Partner or employee of such officer or employee of that company is also not eligible. Officer or employee of company not eligible. Partner or employee of an officer or employee of the company is also not eligible. A person, relative or a partner. For what? For these three conditions. What are the three conditions? Holding any security or interest in CSH, ASH, company, subsidiary, holding, associate, subsidiary of that holding. Indebted excess of 5 lakhs in such companies and guarantee or security with regards to such indebtedness in excess of 1 lakh. Only for the relative there was some relaxation that relative may hold up to 1 lakh of face value. If he acquires more than 1 lakh, then the corrective measure has to be taken by the auditor, because he is seeking the employment right within how many days? 60 days. So the auditor shall not hold even a single share, but relative can hold up to 1 lakh of face value, and these 2 points would be applicable same to both relative person or partner with the indebted excess of 5 lakhs and had given security or guarantee with respect to indebtedness in excess of that 1 lakh. And first point is that who has direct or indirect business relationships, except they held some exceptions where the had been with the commercial transaction as per Chartered Accountants Act 1949 or commercial transactions which are ordinary course of business at arm's length price. That if an auditor has an Airtel SIM, he can audit the Airtel company. If he had LIC policy that was taken, he could be auditor of that LIC office also, LIC. So they were ordinary course of business, and relative or director of KMP is not eligible to be appointed as an auditor. Full-time employee elsewhere. Here the employee of the company, here full-time employee of company or somewhere else. And full-time employee cannot be appointed as an auditor, and a person who has exceeded 20 companies threshold limit. What does this 20 companies in order to count the 20 companies threshold limit, these 3 companies were not included. What are those 3? OPC, small company, a private company whose paid up share capital is less than 100 CR. That is, if it had 99.99 CR, also not eligible. But if it's equal to 100 CR, that is 3 digit, it is included in that 20 companies limit. when it is convicted by court for fraud and 10 years have not elapsed from date of conviction. From date of conviction, okay, directly or indirectly renders section 144 services. Section 144 services were such services which helps the company to function, like providing accounting and bookkeeping services, internal audit, investment advisory services, investment banking services, actuarial services, management services, and design implementation of any financial information system, or rendering any outside financial services or any other kind. Accounting, bookkeeping, internal audit, investment advisory, investment banking, actuarial management, design implementation of financial information system like SaaS, and rendering outsourced financial services like what do most BPOs do, payroll expenses, etc. And what's the manner on appointment of auditors? If the first auditor and it's other than a government company, it was appointed by board within 30 days. In case of its failure, members in an AGM can appoint within 90 days from expiry of such 30 days, and such first auditor hold the office till the conclusion of first AGM. And for it's a government company where it's a first auditor, for the government company, we know it's C&AG within 60 days from date of registration of such company. In case of failure, board within 30 days. And in case of failure of board also, members in an AGM within 60 days. And hold the office till conclusion of the first AGM for the first auditor, enough. And for the subsequent auditor, for a government company, it has to be appointed by a C&AG within 180 days from the commencement of the year and hold till conclusion of AGM. Here, for the government company, it's only 1 year term. But for a subsequent auditor, for the other than government company, till the conclusion of 6th AGM, it was appointed by members in board. Here, board of directors do not come into picture. Board of directors or members. Here, members are appointed in an AGM and hold till 6th AGM, conclusion of 6th AGM. And here are few notes that were given here to the company and here to the auditor. What were those? Before appointment, a written consent from auditor and certificate that his appointment is in accordance with conditions as prescribed under section 141, which we have seen earlier, section 141. And what does that certificate shall consist of? A written consent and certificate. What this certificate consists of, that he is eligible and his proposed appointment is as per act, and his proposed appointment as per limits. What limits? The 20 company limits. List of proceedings against auditor, firm or partners with respect to professional matters stands true and correct, and that's it. These points we'll see somewhere later in cost audit report. In cost audit appointment provision also, mostly the same would repeat. And here for the company shall inform for notes to the company or duties, the company shall inform the auditor with respect to his appointment and also file notice with register within 15 days from which the auditor is appointed. Don't get carried away with as 30 days. Here it's 15 days because mostly when we think of board or when we think of register, we think or something that was filed to ROC, will tend to write it as 30 days because we often see 30 days, but please make an extra effort to remember that it's 15 days here. And a retiring auditor is appointed if he is not disqualified for reappointment. No notice for unwillingness and no special resolution was passed for not to reappoint him. How to remember these 3 points? Not disqualified as per Act, A4 Act, not disqualified for reappointment, and no notice for his unwillingness. That's the person itself, the auditor itself had not had unwillingness, not expressed his unwillingness as perceived for the company had not passed any special resolution to not to appoint him as a auditor, reappoint him as an auditor. If these 3 were met in AGM, if no auditor appointed, existing auditor or retiring auditor shall continue. That's it. With regards to the casual vacancy for government companies, who comes into picture for any kind of appointment? C&AG within 30 days. C&AG for the first auditor 60 days, subsequent auditor 180 days from commencement of the year. For casual vacancy 30 days. In case of failure, board of directors 30 days. For the other companies, board of directors 30 days. In case of resignation or appointment by board of directors should be approved by company at a general meeting. Okay. Casual vacancy by resignation. Auditor shall file ADT 3 indicating reasons. If it's a government company, to whom he shall file such ADT 3 with regard to company registrar C&AG, but if it's not in a government company, no need for C&AG, company and register enough. Failure to file ADT 3, general 50k, remuneration whichever is lower. For continuing failure, 2 lakhs or 500 per day, whichever is lower. This would be the penalty section for not filing the ADT 3. Removal of auditors. Now the auditor had resigned. That's his right to resign. Now we are talking about the right of company to remove the auditor. Auditors can be removed before their expiry by a special resolution after obtaining prior approval of central government. We have to make note of two things. Form ADT 2 plus fee within 30 days of special resolution and shall hold AGM within 60 days after response from central government. So there were two things. AD2 fees with regard to such special resolution 30 days and with regard to prior approval of central government, AGM has to be held within 60 days, and it is obviously after reasonable opportunity of being heard has to be given to the auditor before such removal. Okay. If tribunal is satisfied that the auditor involved in fraud, it may direct company to change its auditor. How do tribunal knows that auditor involved in a fraud or not? Inspection, investigation, inquiry, investigation, inspection chapter in law, right? Yeah. From there, auditor satisfied that auditor involved in fraud and it may direct company to change its auditor. If it's applied by central government, if such application was made by central government, tribunal shall give its order within 15 days. It shall give order within 15 days, and what that order shall consist of? The order shall consist of CG may appoint another auditor and existing auditor shall not function, and such auditor or against whom the final order was given shall not be eligible to be appointed for 5 years from date of passing the order, and auditor is liable under section 447. Okay, that's with regard to the removal of auditors. Now appointment of auditors other than retiring auditors. A special notice for resolution at AGM has to be given for what? Appointment of auditor other than retiring auditor, or expressing that retiring auditor shall not be eligible for reappointment. Okay, on receipt of such notice, company shall send notice to retiring auditor. Okay, this is what the procedure. How do you appoint an auditor other than retiring auditor? Special notice has to be given, and such notice should also be sent to retiring auditor, and then retiring auditor will give a representation in writing and request to notify to members of the company. If there was no adequate time to distribute such to all the members, then auditor may read out at the meeting. Company in any resolution may state the fact, the representation, and send a copy for representation, a copy of such representation. If not sent due to any other reason, auditor may read out at the meeting. Okay. If tribunal is satisfied that representation right that was given to the auditor is being abused by the auditor, that is what defaming the company or etc., or create a panic in public at a large, likewise, then the representation need not, which was not fact actually, which was not fact, only his opinion, and the representation need not be read out nor to be sent to the members. Okay. And with regards to rotation of auditors, and all companies, a few kinds of class of companies have to follow the rotation of auditors, including listed company. If it's a listed company, it has to follow rotation, but if it isn't a listed company, three classes were there. It's easy to remember. Unlisted public company, paid up share capital more than or equal to 10 CR, that is minimum 10 CR. All private limited companies having paid up share capital minimum 50 CR. Listed company without threshold limit. Unlisted public minimum 10 CR. Private limited companies minimum 50 CR. And if companies have not satisfied with the paid up share capital thing, but they had borrowings of more than or equal to 50 CR from public borrowings. That's minimum 50 CR borrowings. If you have taken from any public financial institutions, you are eligible to follow rotation of auditors. As per section 139(2), the above companies shall not appoint or reappoint an auditor. An individual or firm, individual more than one term of 5 years, form two terms of 5 consecutive years, consecutive immediately, one after the another. That is 10 years for the firm and 5 years for the individual. As on date of appointment, no audit firm having common partner shall be appointed to any other audit firm whose term got expired. That is, the retiring audit firm that has to retire as per rotation, and the new audit firm shall not contain any common partners. Okay, the right of company to remove and right to auditor to resign shall not be prejudiced, and that's a normal question or regarding that. And now we are going on with the manner of how the procedure, how the auditors rotate. First, the audit committee shall recommend to board and recommend to the board the auditors whom you are replacing the existing, that is proposed auditor, and a company is required to constitute an audit committee if the audit committee has to be constituted, or there exists an audit committee in the company. The board shall consider the recommendations. If board has any other reasons to disagree with the recommendations of audit committee, it should cite reasons, and but it's not the discretion of the board to consider or not consider the recommendations of the audit committee. Board shall consider. This was tested in various case scenarios, or many case based questions. So it was highlighted here. And incoming auditor shall not be eligible if under the same network of the audit firm. Likewise, we have said, right, should not contain a common audit partner firm, or they were saying same network is regards to the common friend circle, etc. And what are the threshold limits that has to be met in order to form an audit committee? Here, audit committee, all public companies having paid up share capital more than or equal to 10 CR, minimum 10 CR paid up capital, or minimum 100 CR turnover, or having loans more than 50 CR. This is not minimum 50 CR, that is more than 50 CR. But here, for the rotation, applicability of rotation, it is more than or equal to 50 CR. That's minimum 50 CR. Here, more than 50 CR. Please make a note of it. Special attention here. And rule number 3 of CAR 2014, manner and process of selection and appointment of auditors. If the company had audit committee, then the committee, if not board, if it does not have any committee, board shall take into consideration the qualification and expertise, experience of such individual, and also the size in case of firm proposed. Moreover, any order or pending proceedings relating to professional matters against proposed auditor before ICI or court. Okay, what are all the conditions that have to be taken into consideration? The qualification and experience, any kind of orders that were proceedings that were pending, and if the audit committee may call for such other information which may deem fit. What's the procedure? Audit committee recommend to board. Board will recommend to the AGM. If no audit committee, board will recommend to AGM. Audit committee have recommended to board. Board agrees, AGM. If not agreed, it have to refer back to audit committee citing reasons. Audit committee also considered audit committee, after considering the board's reasons and decides not to reconsider, then board shall record reasons for such disagreement and sends its own recommendation in AGM. Okay. Auditor appointed in first AGM shall hold till conclusion of sixth AGM, that is one term of 5 years. And remuneration of first auditor is appointed fixed by the board, and if it has an audit committee will fix, or remuneration of subsequent auditor fixed in AGM. Remuneration includes expenses or any facility provided by him. And here are the rights and duties of the auditor. What the auditor have come for. The auditors have come to audit the financial statements and give a report. That's it. And auditors have to be accountable for whom? Accountable to its members and investors at large. So with regards to these points, we'll figure out what the rights and powers of the auditors and duties of the auditors. They have right to access books. So they have come for that, to check the books, right to obtain information and explanations from officer. It's like external confirmations or written representations from the management, etc. And they have right to receive notice and attend general meeting, where in general meeting mostly the financial statements were approved and auditor annual report was published, so which consists of audit report. So he has right to receive the notice and attend general meeting, and has right to report to members of the company on accounts examined by him, as he's accountable to the members of the company. And he has right to lien on books placed at his possession for non-payment of dues. He could access this right with a condition that the books were placed at his possession and has non-payment of dues. These were unconditional. This is something conditional for non-payment of dues. That's it. And duties of auditor: inquire on certain matters, okay. And with regards to like standards on accounts, accounting or any other company law, provisions with regards to act, and they have to comply standards on accounting, and they have to report, duty to report and sign the audit report, and report on frauds to the government or any other kind of regulatory authorities, etc. And duty to state reasons if at all he had given any qualified or negative report. These were the duties of the auditors. And here it's not so important point, but just remember in one go. And where members can qualify the audit report if the accounting policies required to be disclosed under Schedule 3 of Companies Act were not disclosed, and proper disclosures regarding changes in accounting policies were not made. That is, accounting policies were not properly disclosed and such changes were not made. Such changes in accounting policies, disclosures were not made, and accounts are not prepared under accrual basis, and going concern was not followed while doing and this fact was while doing financial statement, and that fact was not disclosed in financial statement. Okay, you may leave this. This is not so important. And now we have joint audit, branch audit, cost audit. After these three kinds of audit, we go to further part of the company audit. Joint audit means pulling together resources and expertise for more than one firm to render an expert job, which may be difficult to be accomplished while acting individually. That is, they were pooling the resources that are like two or more audit firms work together, pool their resources and expertise, and provide a better service to the client. What are the issues of the joint audit? Sharing of expertise, sharing of workload, improving service to client, lower staff development cost, healthy competition for better performance. Obviously, they could share their expertise with regarding different fields, and they could share the workload and improve service to the client, specific services, and lower staff development cost in order the training cost, etc. for such other fields, and healthy competition for better performance. What are the disadvantages of joint audit? Is you could write it mostly like a behavioral consequences that you used to write in your SCMP with regards to superiority complex of auditors and problems in coordination of work, common area being neglected, and fees being shared. Okay. When a joint auditor come across a matter which is also the responsibility of other joint auditors, which requires the special attention or disclosure, discussion, or any kind of judgment, that said auditor shall communicate to other auditors in writing prior to the completion of audit. Anything, any common area that was there, responsibility of other joint auditors also. Such auditor who had found that has to communicate to other auditors in writing prior to the completion of audit, not after completing the audit report, etc. signing, but prior to completion of audit. Joint auditors require the issue, as there were 2-3 firms doing audit of single client, they have to issue only one audit report. But if there was a difference in opinion, they could issue 2 different audit reports, but referring the other audit reports each one. Joint auditor required to issue common audit report. When a joint auditor is in disagreement, he shall express his opinion in a separate audit report. And audit of a branch office, whether it would be in India or outside India, what do they have to do? Company has to prepare and keep it in a register office, such books of accounts every financial year, which gives true and fair view whether that branch located in India or outside India, that shall be kept in an accrual basis and double entry system. accrual basis, and double entry system. Books of accounts may be kept at a place where board of directors decide, that is any other place other than register office. What do they have to do? They have to communicate to registrar within 7 days in writing the full address of such other place. Okay. If the branch office is situated outside India, the branch accounts has to be audited by the company auditor or accountant or any person who is duly qualified as auditor in that country where the branch is located. But at last, the branch audits also should be audited. Branch auditor shall prepare a report on branch accounts examined by him and send it to auditor, including any fraud. Okay, with regards to the cost audit is an audit process verifying the cost of manufacture or production of a particular article with regard to utilization of material, labor or any other cost. Whether everybody have to maintain cost records? Only after, voluntarily yes, but only after meeting a specified threshold limit. What's that threshold limit is that if your turnover, overall turnover including any products or services that you have given, touches 35 CR, you have to maintain cost records in form CRA 1. More than or equal to 35 CR, including foreign companies, excluding MSME companies. Do it have to do a cost audit? Yes, voluntarily yes, but in order as per applicable law, if it's from a regulated sectors, if its overall turnover is more than or equal to 50 CR, that as soon as it touches 50 CR, overall turnover, you have to do cost audit. Or if an individual product or turnover touches 25 CR, you have to do the cost audit. That is or here, either 50 CR or 25 CR of single product, you have to do your cost audit done for the regulated sectors, but for unregulated, the overall was added to 100 CR, and for the individual turnover it's 35 CR. Try to remember these. That's it. Cost audit shall be appointed by board of directors of such remuneration, and no person appointed under 139 who are statutory auditors shall be appointed for conducting audit of such cost records. Cost auditor appointment procedures. As you have seen, we will also find few common points with regards to appointment of cost auditors. You could find them. Appointment within 180 days of commencement of financial year. The written consent and certificate shall be obtained from cost auditor. Cost auditor shall be appointed within 180 days from commencement of financial year, that is subsequent auditor's appointment in government audit. Same time, written consent and certificate. Okay, we have seen this. What that certificate shall consist of? That individual or a firm is eligible under Companies Act and CW Act, satisfy the criteria, eligibility criteria under section 141. Starting, we have eligibilities, qualifications, right? And proposed appointment is within limits, as per limits, 20 company limits. And the list of proceedings that were with regards to professional matters were true and correct. That's it. Same points were repeated. Every company shall inform cost auditor's appointment in form CRA 2 within 30 days of board meeting in which appointment was made, or 180 days from the commencement of financial year. And the cost auditor shall continue till when? Till expiry of 180 days from closure of financial year, or till he submits his cost audit report. That's it. With regards to removal, a cost auditor may be removed before expiry of his term through a board resolution, because he is appointed by board only, no? After giving a reasonable opportunity of being heard and record reasons in writing. With regards to casual vacancy due to any resignation, death, removal shall be filed by board of directors within 30 days of vacancy and inform central government within 30 days, inform CRA 2. Appointment as normal auditor CRA 2. Appointment with regards to casual vacancies also under CRA 2. Remuneration with regards to company which has audit committee shall recommend cost auditor and remuneration. Board of director, what do they appoint cost auditor on recommendation of audit committee. What do shareholders do? Shareholders subsequently ratify. And if you have no audit committee, what do board of directors do? Board of directors directly appoint cost auditor and fixed remuneration, and shareholders, what do? Same duty, subsequently ratify. submission of cost audit report. A cost auditor shall submit cost audit report in form CRA 3 within 180 days from closure of financial year to the board. To whom the cost auditor shall submit his report is to Board of Directors in form CRA 3. Company, after receipt of such cost audit report within 30 days, shall send to central government in form CRA 4 XBRL. The cost audit rules are not applicable to few categories of companies. What are those? Whose revenue from exports in forex is more than 75% of its total revenue, or something operating in a SEZ, or it was engaged in generation of electricity through captive generating plant. Under section 147, the punishments with regard to non-compliance were, these were penalties, something which we always hate. Bear with us for 2 weeks. We'll figure out something, how to remember the penalties that were there in the whole audit, and we'll figure out something so that before the examination you could just refer that 2-3 pages and go and give your examination. That's last minute. Contravene 139 to 146, minimum 25k to 5 lakhs and for the company, and minimum 10k to 1 lakh for every officer in default. And if you contravene 139, 144 and 145, minimum 25k to 5L or 4x the remuneration, whichever is lower. Auditor, willful contravention to deceive the company, 1 year imprisonment plus minimum 50k to 25 lakhs or 8x the remuneration, whichever is lower. Auditor convicted shall be liable to refund the remuneration and pay damage to the company. Okay. CG may appoint an officer for prompt payment of damages and required to file a report. When the audit is conducted by an audit firm, the partners are jointly and severally liable, but in case of a criminal liability, only the concerned partner who acted in fraudulent manner is liable. And with these were 147 punishments for non-compliance. Try to read once more and you could get that.